Hey everyone, Richard Payne here from Halifax Homes and Lifestyles at eXp Realty, right here in Halifax, Nova Scotia, and it is time to see how the Halifax market actually performed in April. So let's see what's going on. Hey everyone, Richard Payne here, and thanks for tuning in and watching. If you are new to the channel, we would love you to do two things. Number one, hit the subscribe button below, because then you get notified of basically and get to go through all of the information. And do you know what? Let's be selfish here. It helps my subscriber count go up, which is a good thing. But also then smash that bell button as well, so that you get notified of every single new video that we're doing. And that way you can kind of stay on top of everything that we're doing. You can also go back and obviously look at all the previous videos, because if you're in the position where you're moving to Halifax, Nova Scotia, we have basically all of the details that you need to know. Now, we're here because we want to talk about what went on in April. We're past the first quarter. First quarter ended in March, and it was pretty good first quarter. Question for us is what happened in April, and has that trend kind of continued that we're seeing, which is low supply, lots of demand for houses, price appreciation? And the answer is yes. We actually topped the $500,000 mark, the $500,000 for Halifax area HRM. We came in at $504,014. Yeah, that's pretty chunky number. We are up 2% on last month, but more importantly, and take this with a little bit of a grain of salt, because we know that April last year was kind of like March was when COVID hit. April maybe was a little bit suppressed in terms of price points and activity, but you know, either way, we are up 45% on that number last year. So that's a huge increase in 1 year. I mean, again, that's month to month, and we know that since around about November, December, we've been kind of trending upwards, but like 45% is a big number of increase. Days on market, 18 days on market. We were at 40 this time last year. So that's another indicator that everything basically is moving quick. Basically, if you're not in looking at the property in the first, I'd say 4 days, 3 days, then chances are you're gonna struggle. It's one of the challenges that we're having right now. Basically, with a lot of the buyers is, can we get in enough time to then be able to, number one, look at the property, and then number two, can we actually get an offer in before the agent who's listed the property has said all offers to be invited. So it's a little bit of a challenge, but got to move quick in this market, because 18 days on market, that's what it says. Number of houses sold, 780 homes. That's up 136% on last year, and also up 20% just on last month. And last month was a brilliant month. Now, the issue for that is that we've only got 313 homes for sale. That gives us 0.4 of a month, so less than half a month of inventory. Now, looking at those two numbers last year we had 1,124 homes for sale, and we were at 3.4 months of inventory. We knew it was starting to show these signs last year, but you know, it's so much tougher this year than it has been last year to actually find the right home, get in and view it, write the offer, and then it's a question of what price becomes the sensible number. Let's have a look at a couple of other things. So sale to list price, 111.7%. So on average, you're paying ish 12% over asking price now. That number last year was 98.3%. So you could actually get underneath asking price last year. Not really the case this year. It's surprising how much that changed. Sales to new listings, in terms of how many did we actually list versus how many did we sell. We did okay here, actually. We've been struggling because we've been basically over 100% list to sale price, list to new price numbers. The difficulty now that we're seeing is once we get over 100% sale to new listing, then basically you're not putting new houses on the market for sale in the same ratio that you're actually selling them. This time that changed. We're only at 90%, only 90% this month, which means that we listed 869 homes, we sold 780. So we actually put a few more homes on the market, but still with only 313 homes for sale. That's not a lot of homes for sale inside of a population of roughly 500,000. You know, if you took that and said, let's say there's 165,000-ish homes that are actually available to live in inside of Halifax Regional Municipality, then yeah, there's only 313 homes for sale. That's not a lot of homes. So the competition is really strong out there, especially for good homes. Now let's look at some of the actual individual neighborhoods. So number one, my little community of Lower Sackville, the starter community. It's not a community where I live, it's just close to me, and it's my little hood. It's basically the starter market, but not anymore. The average price point there was $367,000. Days on market, 9 days on market. 91 homes sold. There's only 11 active, which gives them a 0.1 month of inventory for sale right now. Like 11 homes for sale. Number 2 then, we moved down the coast, down the 102, and we end up in Timberley, St Margaret's Bay, Upper Tantallon area. 76 homes sold there, 25 homes active, 0.3 months. Average price there though, $512,000. Primarily, I imagine that's a lot of like what's going on in Westwood. Westwood Hills is a very popular subdivision down in Upper Tantallon, and certainly the size of the houses would probably be an average of 500 or up. So that's probably driving their market. When we look at number 3 though, usually we're like, it's Bedford West or Bedford Regular, somewhere like that. This is actually, we're into Woodlawn and Portland Estates in Dartmouth. 60 homes sold there, average price point $402,000, 7 days on market on average. There's only 9 homes for sale, puts us at 0.2 months. So those are the stats. Like, it's a tough market out there. You've got to be really creative today. Now let's look also at the number of homes over $100,000 sale price to asking price. And of the 780 homes, there was 151 of those that actually were over $100,000. So, you know, it's kind of the situation that if you were looking at a house that's take the average list price, 451, you would have to pay at least 504. So you're talking at least $55,000 on average. Now, obviously, each different market can be very different. So that's why we dig into the actual market when you're starting to look at buying, to give you, okay, if we look at similar houses on the same street, the same neighborhood, how much over asking did those houses actually have to go in terms of percentage as well as dollars? Because that's what we've got to do to actually make sure that we're staying well ahead of this market and we're being attractive enough to get our offers accepted. So that's the trick. Now, quick bit of information about new builds. Just talking about 20 minutes ago to a builder for a client of mine that's going to basically look at building a new house. April next year is when we'll get the keys, because that's when it'll be built by. But it's the builders have started introducing something called an escalation clause in their agreements. Because what they're seeing is not only are they struggling to try and build the house, but their supply chain is getting jammed up with labor and materials. So hence they're on 12 months now to build the house. But when you look at the actual cost of the materials, they're starting to say, well, look, if the cost of material when we sign the agreement is here, but then the price of the material starts increasing between now and when you get the keys, and obviously they're going to have to look at that pricing model, they're starting to put an escalation clause in the agreement of up to 5%. So that means if you're buying the house for $500,000, it could potentially actually go up to $525,000 before you get the keys. And at that stage, you get notified of what that price increase is going to be, because obviously the builders are sucking up the material cost. And if it's up to 5%, that's the price increase that's going to be passed on to the actual buyer. And you have a choice when that happens. You can either terminate the agreement, or you can just say, okay, fine, just carry on, and that's the number. But that's a new one. Not heard that before. So that's going to be interesting to see how that plays out. So there's the stats for the market. Make sure you're subscribed, make sure you've hit the bell, and if you want any details or you want to get in touch with me, the details are coming up below. We'd love to have that conversation, and you know, right now we need more people to think about selling their houses. Trick is, where are you going to go to? What's the problem? How are you going to solve that solution of what are you going to buy, even if you sell? So got to get creative on that as well, but we've done videos on that, so tune into the other ones at the same time.